Good morning. It's Jeffrey Christian, CPM Group. It's just before 10 o'clock on Friday, the 30th of June here in New York. I wanted to talk about why I always own gold and silver. And when I say I always own gold and silver, yes, I do. But I'm really talking about investors more broadly. And the subject has come up always. It's come up currently. CPM Group has a reputation of knowing what it's talking about in the gold market and in the silver market. And one of the points that we've made in the past repeatedly is that the gold price rises and falls. That's what market prices do. When the price has risen very sharply and falls back, it, generally speaking, doesn't fall back to previous levels. But you can have extended periods of times, as you did from 1982 until 2001, when the gold price is relatively tame. And the same is true with silver, up and down. And CPM Group is known because it has trade recommendations that we provide our clients. And those extend from 1 week and 2 weeks to 10 years and beyond. We have most of our clients are long-term investors. They're not short-term traders. Some of them are long-term investors who have short-term trading. And CPM Group has often advised people that you should think of your precious metals holdings in partitions and compartments. And part of it is a long-term insurance program, and part of it is a shorter-term investment. And then part of it might be an even shorter-term trading positions. And these are our intermediate-term recommendations since 1980. And, 1980 to 2000, we were saying about 68% of the time you shouldn't be buying silver as a investment with a 1 to 3 year time horizon. If anything, you should be selling it. We changed that view in November of 2000, and then in April of 2011, when the price had gone from about $5 an ounce to about $50 an ounce, we said sell it. And then we issued a buy recommendation there. So that's buy and sell, that's terms. These can be and often are physical transactions or forward or future transactions. Forwards and futures are good for shorter-term investments. And if you're a short-term investor, that's probably where you want to go. Forwards, futures, maybe ETFs, and options. We like options a lot because of the power that they give you and that you have a predetermined maximum loss, which is the cost of the premium that you can have, depending on how you structure your options programs. Those are shorter-term investments. For longer-term investments, physical gold is the preferred way to go. Now, some people don't want to be involved in futures and forwards and options and ETFs. They want physical gold and silver. And that's very difficult to do on a short-term investment basis. You could do it on an intermediate term, 1 to 3 years, and you can do it on a long term, and you should do it on a long term. And CPM Group has always advised that. And so as a result of that, what happens is you have a core physical position, which is insurance, or it's part of your long-term wealth holdings. And that's typically physical metal, or in some cases, physical metal combined with mining equities, things that don't expire. The shorter term things can be physical if they're intermediate term, but because many investors don't have the money to trade at 100-ounce units or 400-ounce units, the standard size of gold, or 5,000-ounce units in silver, they really need to focus on more efficient ways to be short-term investors in the gold and silver markets, and those more efficient ways are those futures and options. But you should always have some physical metal as that long-term insurance. That's why you can see here these buy and sell recommendations. That's for a portion of the portfolio. It doesn't mean get rid of all of your silver, and it doesn't mean get rid of all of your gold. You should always have that, because you never know when you're going to need insurance. Accidents probably aren't that predictable. And when we talk about insurance, you're looking for protection against a variety of things. Some of those things are personal. Your personal financial wealth and well-being, the stability of your job, whether you're moving into retirement, where you live. Accidents, the sudden need for money. All of those things are personal issues that might cause one to want to have gold and silver as a physical long-term holding. And then there are societal and national and global issues. And this is a chart that we use. We publish this and we update it every month in our Precious Metals Advisory. This is from last month. And what we do is we look at what's probable that could happen. And we rate that. And we rate it, along the horizontal axis, it's the likely impact that it would have on gold or silver. And then on the vertical axis, it's the probability that it occur, in this case, in the next 6 months. We also have a companion bubble chart that looks at the next 12 months. And then in our long-term reports, we talk about longer-term issues. And you can see all sorts of issues here: a bond market decline, political risks, global recession, U.S. recession, a stock market decline, deterioration of Japanese or U.S. or Chinese economic conditions, or there are any number of factors that are there. And continuing the theme that I've had in the last few videos, probabilities are very important. You won't find the Great Reset or the Treasury market collapses or the Chinese government dumps its U.S. Treasuries, bonds, and notes in our probabilities, not for 6 months, not for 12 months, and not for the next 10 years, because those things are improbable. That's what the snake oil and potion sellers, talk about. But what's really important is what's likely to happen. And you never know what's going to happen, but you can say, okay, here's a list of things, and then there's the unknown, the black swans that everybody likes to talk about, but they don't really understand what that term is, and the other unknowables, which are not black swans. They just aren't known. So there's this probability, and you really need to look at what it is that is likely, and you need to have protection against it. And you never know when it's going to happen. We talk about a recession, and there have been people who have been talking about the imminent collapse, and it's not a recession, it's going to be a depression, this is going to be worse than 1929. Most of that stuff's improbable. The probability of a recession is 100%. Question is, when will it occur? How deep will it be? How long will it be? And what will it do to you personally, financially? And in other ways too, because your finances affect those other things. So you have to pay attention to that. You don't know when it's going to come. And we've been saying, we've been saying for some time that we thought a recession might come in 2024, 2025. So far, we've been right, but we could be wrong. You can't use econometrics to accurately predict when a recession is going to arrive, how long or how deep it's going to be. But you can say with great certainty that there are economic factors that are out there. And by the way, the economy is stronger than a lot of these people have been thinking. The economy has been stronger than a lot of mainstream economists, including those at the Federal Reserve Bank, have been thinking. It's running around 2% in the first quarter in the United States in terms of real GDP. The Fed's uh, review of the major systemically important banks, like 23 of them, was released this week, and it shows that all of them are in better shape to face a crisis. All of them have sufficient financial reserves to sustain like a $540 billion loss, each of them. Yeah. So there's a lot of power and strength that's going there. I still, we're seeing people use these terms like soft landing and even inflation, and they have no clue what inflation is. Inflation is not a thing. Inflation is the combination of events and conditions. So agriculturally, we're seeing very high inflation right now because we've had a lot of weather issues around the world affecting crops. Energy is now deflationary, if you will. I would call it disinflationary, in that petroleum prices and petroleum product prices have been declining. And even though OPEC plus one has been cutting back on its stated expectations of how much oil is going to pump out, the price of oil really hasn't responded by rising sharply. So you've got to look at the probabilities, and you have to say, I don't know when these things are going to happen. I don't know what's going to happen, but I probably should have some physical gold and silver. And physical gold and silver, unless you really are wealthy and you can trade 100, 400 ounce lots of gold or 5,000 ounce lots of silver, physical gold is probably not suitable for those short-term investors, but it is suitable for longer-term investors. So if you want to own physical gold, you have to have a longer-term horizon. That's all I have right now. We won't have a video on Tuesday because it's going to be Independence Day in the United States. I have had a tradition since at least 1971 of reading the Declaration of Independence on the 4th of July. That's a link to where you can find it in the National Archives. It's right next to Mr. Trump's secret documents. No, it's not. It's in a different area. But you can go online and find the Declaration of Independence. It's very interesting. And this is a book called Declaration, which came out in 2011, I'm pretty sure. And it's a really good book talking about the politics from May until July. And after the Battle of Bunker Hill and the British March on Concord, things got serious. And the vast majority of the Continental Congress, which existed in the colonial time, didn't want to secede and slough off. It didn't want to declare independence. But Samuel Adams went up and down the coast, working the audience, working the crowd, riling them up and saying, hey, this has just gotten too intolerable. And it's gotten intolerable for a variety of reasons, and it had gotten intolerable. But as the Declaration of Independence says, most people will tolerate intolerable circumstances for way too long of a period of time, rather than replace the government that is asserting those intolerable terms. But Sam Adams was a businessman, and he was bristling over several factors. One were taxes. He didn't like all of the taxes, and the taxes back then were much more onerous than they were in the 50s, 60s, 70s, 80s, and today. And he didn't like the fact that the British government said colonials only should trade with Great Britain. There was a tremendous amount of trade. I mentioned it when I was talking about Russia. The competition in the Pacific between Russia and the colonial America for whaling in the North Pacific and trading along the coast. The Russian government had taken Alaska, what is now Western Canada, Washington State, Oregon State, into California. There was a lot of political competition between Russia and the United States in the Pacific. Who's going to trade with Hawaii and China and Japan and Korea? And Britain was plugging into that, and the Philippines was a very important trading area. And Britain was projecting itself all the way from England to the North Pacific and competing. And it passed a law that said colonials may only trade with us. So they were trying to legally cut off the competition from colonial America, of which Samuel Adams was a significant part. Economics are important. There were a lot of non-economic factors and political factors and social factors that were there. By the way, they were marching on Colonial on Concord because that's where the arsenal was. Because in colonial America, as in early America, what's the phrase that showed up later in the Constitution? A well-controlled or well-managed or well-organized militia is critical to the republic. And back then in colonial times and in early America, if you had a gun, you were supposed to store it with the government armory. And the government armory was in Concord. And the British were going to collect the arms because they were afraid of a revolution. And they got one. Have a good 4th of July. We won't do a video next Tuesday. We'll be back a week from now, and we'll see where the markets are then. Take care. Take care of yourself. Take care of those around you. And try to do something good for the world. I'll see you next week.